Happy 2023, everybody. So this is a piece of news which is quite welcomed. Link REIT finally bought the malls that the NTUC enterprise is selling. So I've been monitoring this piece of news quite fervently because it's actually very important. And now that the confirmation of the transaction is done, I think it's a big sigh of relief to investors in Singapore, especially those with a significant portion of their portfolio in retail REITs. I think it's a big relief on multiple fronts actually. So I'll talk about why it's multiple subsequently. But I can see Linkgrid bought the malls, and they actually bought the Jurong Point Mall and the Thomson Plaza. So we'll talk about the transaction. Initially, in June of 2022, news surfaced of NTUC Enterprise trying to sell their malls, and it's quite a very big transaction. They were rumored to be interested in selling Ang-Mo-Kio Hub, 50% of the stake in Next, together with Jurong Point as well as Thomson Plaza. So in total, the transaction size is actually $4 billion. Once the news came out, people started worrying about the Singapore REITs actually, because it's quite evident given the size of the transaction that if any of the Singapore REITs wants to buy the properties, there will probably be a need for a very substantial equity raising exercise. And this was not very welcome news, especially when you consider the fact that the interest rates are rising and there's so much fear and there's a pressure on the share prices already. And you can see the news flow after that actually. After June, right, the next piece of news came in roughly October, and the rumor was that they're trimming the size of their portfolio sale size, which is quite understandable given that by October, equity markets went into a complete meltdown, right? I'll talk about it previously. You can see the REITs are all melting down all over the place. So the cost of funding became very, very expensive, and it was quite clear that there's no appetite for 4 billion transaction size, right? Then after that, finally in November, frontrunners rumored to be Link REIT. And at this stage, the rumors was that CICT and FCT were also frontrunners in the pack. But ultimately, it looked at Link REIT seems to be the ultimate frontrunner. And finally, transaction went through with Link REIT buying the malls. And if you go to the Hong Kong website and check out the announcements by Link REIT, there's this piece of news, and you can download it and look at the transaction financial details. So these are the details actually. In short, the transaction size was around 2.2 billion Sing dollars. For Jurong Point Properties, they bought it at 1.989, and for the Thomson Plaza, it's 172 million. And if you look at the numbers, you can look at the 3-year numbers, right? So they gave it for the full year 2020, full year 21, and 10 months 22 when the transaction concluded. And you can see that in 2020, the numbers were kind of an outlier, right? Because of the rental rebates given because of COVID. And 21 was the year of somewhat normalization, right? And look at 22, the numbers are even better. But of course, it's only 10 months versus the 12 months that is over here. But I think in general, the numbers are quite comparable. So if you take 12 divided by 10 times this number, you get something like this. Somewhat here and there, I think it's very comparable. So if you take the net rental income before tax, and you divide it by the acquisition price, you end up with the MPI yield, right? So for the Jurong properties, Jurong Point property, you take 98.5, you divide it by 1989, you get a 4.95 MPI yield, right? Which is the ultimate transaction price. And for Thomson Plaza, you take 9.7, you divide it by 172, you end up with 5.6%. So ultimately, this is the transaction yield, right? Which is very understandable because Jurong Point is linked to the Boon Lay MRT station, well connected, very, very big. There's a very, very substantial catchment area. So this is a very well performing retail property. So you expect something like this kind of MPI yield. For Thomson Plaza, it's a bit out of the way, although recently the new MRT station opened and now there's a MRT link. But nonetheless, you expect the Thomson Plaza mall to trade at a higher yield compared to Jurong Point. So this is very understandable. It's quite in line with what I expected. And more importantly, if you look at the announcements, this is a discount of 6.1%, right? So what happened, I think, is that the valuers were valuing the Jurong Point property at 4.67% yield, and the Thomson Plaza property at 5.3%. Ultimately, the transaction price was 4.95 and 5.6. So it's a discount, right, to the valuer's valuation, which is understandable because the markets are not exactly that great right now, right? So there needs to be a bit of a discount given, especially of a transaction of this size. So why is this a big relief to me? Well, if you look at the cap rates for the retail malls in Singapore, so for example, you look at the Fraser Centrepoint annual report for 2022, so just fresh out of the oven. Look at it, the cap rates are 4.75 to 5%, right? Across the board. Central Plaza is at 3.75, but this is a office, right? So it's different. But in general, the cap rates given for Singapore office malls, Singapore malls, retail malls, 4.75 to 5%, right? Which is quite similar to last year. So not much of a compression. So very stable, right? So this is unlike what is happening to some other REITs with overseas assets, and you can see that their cap rates are just bouncing up, expanding very very fast, right? Leading to asset devaluations and passing of their gearing limits, right? So I think for retail malls in Singapore, given the fact the transaction just occurred a few months ago, I think the conclusion is that the cap rates of the Singapore retail assets is still solid. I don't think you're going to see a big rise in cap rates of the Singapore retail malls anytime soon, and therefore you should not expect a devaluation of the retail properties anytime soon. Therefore, the gearings should also be quite well managed, and therefore there's really no need to worry too much about a big dump off of retail malls because of asset devaluations. Rock solid Singapore retail assets. Not all retail assets are rock solid. Singapore retail assets, I think, are still very, very well sought after by overseas investors. So the cap rates should be very well maintained. So that's the first sign of relief. The second sign of relief is really because now that this transaction is out of the way, the fears of the REIT overpaying for their assets and therefore needing to do a very, very dilutive and very, very big equity fundraising exercise leading to more share price weakness, this risk is now gone, right? It's largely diminished. So I think what's going to happen is that the REIT will just be focused on managing the interest rate risk as well as the recession risk looming if it really happens, and the fears of the highly dilutive EFR to fund overpriced transactions is now over. So I think it's good news for investors in Singapore retail assets. So like I mentioned in my last video, my World Cup Dream Team for 2023, I have a whole midfield of retail malls leading the charge for 2023. So with this piece of news, I'm actually quite well relieved that I'm not going to get some negative surprises for 2023. So good news indeed.